What's up everyone, welcome to the video. In this video we're going to give a quick market outlook for the broader markets. We're going to see what the stock market's doing, what yields are doing, or inflation. We're going to look at the dollar. We're going to check out the credit markets and VIX, of course. As of right now, you can see the S&P futures markets opened up with a tiny gap down and then a slight sell-off. Actually, it was kind of a swift sell-off right at open of S&P futures. It quickly recovered, but it looks like we're getting a little topping tail, so we might get more downward pressure here. When we switch to the daily candles, you can see that this has been a very strong downward trend here. Very strong sell-off, very fast sell-off. When you pull up the indicators, you can see MACD is in bearish territory and falling. We have oversold conditions on RSI and KDJ. Typically, very oversold conditions on KDJ and RSI will indicate very short-term bullishness. We might see a short-term bounce here, but the momentum to the downside is really strong. You don't want to fight the momentum when the volume is rising big time like this. This shows momentum in this downtrend. You do not want to fight the trend, guys. But then again, if you were going to make a short-term trade and you were going to go short on the market, this would be kind of a bad spot to enter into a short position. Things are oversold, and this downtrend looks a bit overextended. It looks like it might need a little cooling off before continuing down if, of course, the market wants to continue downward. So I'm not jumping into any long positions right now, long-term or short-term long positions, but this market does like it needs kind of a small bounce or we're just going to melt down completely. Now, when we switch over and see what's happening with the dollar has been the number one thing to invest in this macroeconomic environment we've been in for a while, basically this whole year. And the dollar broke out big time, especially last week. But you can see the price did break out above this channeling resistance line here. It did break out previously, so an overextension can be expected. But if we are following this trend, then we should see some cooling off of this rally, possibly a small dip just to remain inside of this trend that the dollar has been bouncing around for several months. And if you follow the inverse correlation between the dollar index and the stock market, you know that if we do get a little dip in the dollar, then we might see some green in the markets. And if it's anything like these previous dips in UUP, the market turned green when UUP was going down here, and the recent underperformers like tech became the outperformers to the upside. So keep an eye on that if we do get a dip in the dollar. And I do want to point out the most important thing about the dollar index right now is it is near previous highs from several years ago. This is a strong area of consolidation, a long-term area of consolidation, and we are just below this resistance zone that I marked. So it'll be very interesting to see what the dollar does at these high levels. Will this breakout continue? Will we consolidate just like we did in the past here? Or will the dollar get some resistance here and reject this previous consolidation level on the long-term quarterly candles here? This is the strongest resistance zone that the dollar has been around for a while. All these other resistance levels were quite weak compared to this very long-term and strong major resistance zone here. So keep eyes on this for sure. A lot of investors and analysts were calling for the dollar to slow down quite a bit at these high levels. Honestly, the only way, in my opinion, I can see the dollar going down and the market still continuing to rise and defying the inverse correlation is if the economic situation improves in Europe, their currencies will strengthen. That will bring down the dollar. And also, their economic situation improving would definitely bring up our market slightly. But then again, an economic improvement in Europe would likely be bad for inflation, so we're in an interesting situation here. Short-term bond yield continuing to break out to the upside. They recently passed above this resistance, long-term resistance level here from 2018 or 2019, around there. Here you can see on the daily candles a strong breakout to the upside. This shows that investors in the short term are expecting rates to be high. Jerome Powell confirmed the rates are going to be high for a while. Here's the 30-year yields. They broke out as well, making new 52-week highs. This is a bad look for the market and long-term inflation. Interesting to see that the 30-year yields are near a dynamic resistance level, an upward trending resistance level, so definitely keep an eye on that whenever the yields reach that area at least. And here you see the 10-year yields. They broke out to the upside as well, new 52-week highs here. This is very bad as we have all three of the major treasury yields inverted. When the shorter term yields are yielding more than the longer term yields, then that looks like a recession's coming in the future. Basically, they don't see growth happening on the long term picture. Investors don't, I should say. And even Jerome Powell was forecasting a yields outlook for the future, and he had a 4.6% peak target. He could be wrong, he could be right. Those guys are really smart at the Fed, so you got to listen to him. That's all we really have to go on at this point. So we should see yields rising more. The 2-year yield or the 10-year yield should get to this 4.6 before we see anything drastic happening at the Federal Reserve, if they do anything at all. But yields are going to go higher. That doesn't look good for the market, so you would assume the market's going down off of this aspect, but the market does whatever it wants, so you always got to pay attention to these technical levels. And I just want to quickly go over corporate credit because a lot of investors use corporate credit as a future indicator of stock market prices, because if you invest in the credit of companies, then you're assuming that companies will have a good future outlook and you'll get your money back, basically. This ticker symbol is LQD. We have new 52-week lows, a breakdown of long-term support. That's very bearish for the markets and for corporate credit. Here is HYG. These are less liquid companies. These less liquid companies you might find in like the Russell or the mid-cap ETFs. This one's near 52-week lows. It did have a breakdown to new lows, but the price recovered on Friday, so we're not at 52-week lows, but this did make new lows. That's bearish for the market, especially if we dip even lower. It shows that investors investing in corporate debt are less confident in the company's future, basically. And last but not least, for the market outlook, we have the VIX. The inverse correlation shows you that VIX rallies when the market is crashing, and VIX has been rallying pretty strong lately while the market's crashing. And I want to point out this downward trending resistance level. This is a very long-term resistance level that I have marked from the spike in VIX from the pandemic crash. Let me show you. Here you can see that resistance level marked out. This resistance line coincides with these previous peaks here, and we are broken out above it at the moment. Each other time in the past, when VIX reached this dynamic resistance level, we did get a strong rejection to the downside, so keep an eye on the price of the VIX and the market at this level. Also, watch for the VIX to come a little higher and test these previous highs, possibly come towards some of these resistance zones that I have mapped out on the VIX. In the past, the price has reached these resistance zones and had strong rejections, so those will be the higher levels to watch if the VIX does climb higher. But if the market keeps this downward trend, we will see VIX come higher. I'm almost positive of it. And that's basically it for the weekly market outlook. If you liked what you hear, definitely hit the like, subscribe, hit the notification bell, all that good stuff. And if you have any questions, suggestions, any comments, leave that in the comments section. If you have some technical levels you want me to map out on one of your ticker symbols you're invested in, I can do that for you. Leave that ticker in the comments. And that's it. I'll see you on the next video.